Arielle from Fix My Books, and today we are going to talk about Accounting 101. So basically, we're going to start from the very, very beginning of what debits and credits are, what the accounting equation is, and so on and so forth. The reason I am making this video is because I truly believe that as a business owner, you need to know these basics. So I'm here as a bookkeeper helping other business owners and maybe, college students out in terms of what accounting really is. But I really believe that as my role as your bookkeeper would be to help you understand what's going on with your business. So with that, that also means that we need to be speaking the same language. So accounting is the language of business. So if you don't know the basics of accounting as a business owner, no matter how hard I try to explain things to you, you're not going to understand, because it's like I'm speaking English, you're speaking Chinese, right? There's no way we're going to understand each other without having some basics in place. So that is why I am making this video. And although this sounds very cheesy and a lot of people say it, my goal is to really empower the business owner to understand their financials. Meaning, if I send a business owner, one of my clients, a profit and loss statement, I want them to be able to understand it themselves. Even though, I'm there to explain some nitty gritty details, why certain things are certain ways, I want them to at least be able to look at the profit and loss and be like, okay, this is my revenue, this is my gross profit, these are my expenses, and this is like my net, right? I want to be able to do that. And with that being said, I know that somewhere maybe there's a college student out there who is watching this video right now because they want to understand accounting, or maybe they're taking their Accounting 101 course and need someone to help explain it to them. So this is the video that I wish I had when I was starting to learn accounting, because debits and credits are not that difficult once you understand this basic concept. And I wish someone explained it to me this way when I was starting out. And I think I would have gotten, accounting like that. Like, I really would have gotten it much quicker if it was explained this way. So I am now making this video that I wish I had. So with that being said, let's get started. Okay, so by the end of this video, you will know what debits and credits are, what the accounting equation is, and know what assets, liabilities, equity, sales, and expenses are. So just 3 things and we will get started. So what are debits and credits? So people get really intimidated thinking, oh my God, debit this, debit that, credit this, credit that, but it's not anything complicated. Debit, or DR for short, just means left. And credit, or CR for short, just means right. There's no like this is not like right or wrong. It literally means when you say debit something, it means put it on the left. When you say credit something, it means put it on the right. And you'll understand this better once we get to the next slide and you actually see what I mean. So the old school style of accounting, right? That's why you understand this, like I understand this so well as left and right, is because when you actually do accounting in school and you have to write things down, like manually, right? This is what it looks like. So when you say debit something, it means you're just going to enter it on the debit side, which is the left side. And when you say credit something, it means you're just going to enter it on the right side, which is the credit side. That's all debit and credit really means. So with that in mind, we're going to move on to the accounting equation. So what is the accounting equation? This is like the be all and end all of accounting. So it is assets equals liabilities and equity, right? So these all have to balance out. You can't have assets at 100,000 and then liabilities and equity add up to 105,000. That's never gonna happen. So they will always equal each other. So what are assets? Obviously, this is something everyone would be familiar with. So assets are things like cash, if you have a computer, whatever you know, assets or whatever things you can sell for money or actual money itself. Another example of this would be accounts receivable, right? That's an asset because you're anticipating that you're going to get paid. So that's why you want to receive that money. So those are some examples of assets. What else? Computers, office furniture, buildings, etc. Those are all assets as well. Liabilities, this is something a lot of people are familiar with, especially if you have a credit card. A credit card is a liability, something that you got to pay off each month. Your mortgage is a liability. It's something that you have to pay each month, right? So in this scenario, let's say your house is the asset, but your mortgage is the liability. If you get what I mean. So let's say your house is $1 million and you owe $700,000 on it because you put $300,000 down. So your asset is $1 million, your liability is $700,000, and your equity, or what the part of the house that you actually own, is $300,000. So that's a really good example for you to understand what assets, liabilities, and equities are. So equity is basically what you own in the business, right? So you can't have assets without equity because you either own the assets or you borrowed money, liability, to pay for those assets. So you see how it all comes together. So I hope I was clear what assets, liabilities, and equity are. Equity is just what you own in the business yourself. So if your business has, again, $1 million in assets and you owe, you know, your creditors, you took out loans, credit cards, etc., of, let's say, $600,000 in liabilities. So then it means you own $400,000 of the business, because when you sell all of those assets, the $1 million in assets, and you pay off all the liabilities, obviously you have to pay who you owe before you have anything left, right? So after you pay all your creditors, the $600,000 you owe them, then what's left is the $400,000 you actually own of the business. Okay, so debits versus credits. So as I mentioned a while ago, debit just means left and credit just means right. Now, the reason why these are separated, if you go back to the accounting equation, right? Assets is on the left and then liabilities and equity is on the right. So same thing, assets on the left, liabilities and equity is on the right. However, we did add expenses and sales in here because these are also part of accounting. So just remember where they live. So just think about it this way. Assets and expenses, they live on the left, okay? Which is debit. They live on the debit side of town. Liabilities, equity, and sales, they live on the right or the credit side of town. Doesn't mean one is correct or one is wrong. That's just where they live. Now, if you just think of anything, right? If you remember one thing, this is what you should remember. Wherever these live, where the assets live, right? They are happiest when they are on that side. And then when you remove them from where they live, they become sad. So again, this is assets and expenses live on the debit side. So if you debit an asset or an expense, you add to them because that's where they live. And then if you credit an asset or an expense, you subtract from that and they're not happy because that's not where they live. Next, if you look at this here, liabilities, equity, and sales, they live on the credit side. So when you remove them from their house or where they live, right, when you debit a liability, right, you subtract from that liability and they become sad because that's not where they live. When you credit a liability, you add to it because liabilities live on the credit side and they become very happy when you credit them. So that's all you need to remember. Where they live, because once you know where they live, when you add to where they live, then you have to add to that account. When you take them out of where they live, then you have to subtract from that account. So that's why I wish someone explained it to me this way, that this is all I have to remember, that debit is where assets and expenses live. If I debit these assets and expenses, I add to them. If I credit these assets and expenses, I subtract from them. But it's the opposite thing when it comes to the other side, which is the credit side. So liabilities, equities, and sales, they live on the right side or the credit side. So if I credit these things like sales, I will add to them. If I debit sales, that's not where sales lives, right? Debit is not where sales lives. Then I will subtract from them. That's really the easiest way to remember debits and credits. Now, in this example, this is what a journal entry will look like on a general ledger. Most of you will never ever see this in your life because this is a manual journal entry. And we all obviously use like QuickBooks Online and all these other online accounting things now. So very rarely will you see something like this. But just for reference, this journal entry, you are debiting cash and you are crediting sales. So you are actually adding to both of them because cash lives on the debit side and sales lives on the credit side. So remember this. And there we go. So you debited cash, which is an asset, and then you credited sales, right, which lives on the credit side. So you add to both, you put them in their houses, and they are both happy. So I hope that is a good explanation of like just basic accounting concepts, accounting 101, debits and credits. And if you have any questions, please comment them down below. And once again, this is Arielle from Fix My Books. So if you found this video helpful, please don't forget to like, subscribe, and share this video. And don't forget to hit the notification bell so you always get notified whenever I upload new videos to my YouTube channel. And once again, this is Arielle from Fix My Books, helping you fix your books.